Hello, my name is Steve Bigelow with the Candlestick Forum. There's an element of profitable trading using candlestick analysis that a lot of people don't acknowledge or address. And that's basically putting all your stars in alignment. Profitable trading, whoops, I didn't spell that right, did I? Is the first function that you want to do is have a good analysis of what the overall market is doing, because obviously you want to go with the flow. Now, we've had this bearish J-hook pattern based upon that bearish kicker signal that brought you back below the T-line. However, today, even though we're not quite in the oversold area, we had a bullish trading. It doesn't necessarily mean there's been a full-scale reversal, especially if they're trading below the T-line. But it does give you the prospects that bullish sentiment might bounce it back up to this level, to the T-line, and then you watch to see what type of signal occurs at that level. So a very simple analysis. As long as you're below the T-line, you have to assume you're still in a downtrend. So you saw that same thing over here on the NASDAQ, also not quite in the oversold area, which still kind of indicates they could bounce it back up to the T-line area. But until they can close it above the T-line, the assumption is that you're in a downtrend. So one of the major benefits for profitable trading with candlestick charts is it tells you when to enter, especially when you can identify a pattern, such as the dumpling top. Then notice you had the big gap down, not gap down, but big down move below the T-line, starting the downtrend. But then you also get some very good visual analysis of when the probabilities are starting to go against you, that if you were short, it looks like there's buying down here. And remember, there's another trading rule using the T-line. The further away you move from the T-line, the higher the probability you're going to come back up and test it. So this would probably change the probabilities and saying, well, if you got a good profit here, the probabilities are starting to change. Let's close it, take our profits, and go on to something else. So we can enter good trades based upon knowing the direction of the trend. Our recommendation on Upworks was based upon this downtrend, this bearish kicker signal, bearish J-hook pattern. And today we were shorting it because of the Doji rule. The price is usually going to move in the direction of how they open after a Doji. And if they opened after a Doji heading lower, that puts us in with a bearish Doji sandwich, indicating more downside for wave 1, wave 2, wave 3. So knowing the Doji rule allows investors to know exactly what they should be doing based upon how prices open after the Doji. So for example, we also recommended shorting ARRY based upon that if it had opened lower today, obviously you have bearish Doji sandwich and a downtrend. That would tell us that they weren't holding at the 200, they were still trading lower. However, you can see they opened this positive and took it up. So that kept us out of a trade that would not be working. So again, it didn't confirm what the signal we were looking for. So you move on to something else. Daku is setting up for that same scenario. Look at your bearish kicker signal failure right here at the 200. You're now below the T-line, and you've got a Doji. Very simple trade. If they open the markets lower and this is opening lower, you've probably got a bearish Doji sandwich that's heading down into this range. You could be shorting on weakness. Another indication was your stochastics are still heading down. So you can expect wave 1, wave 2, going into wave 3. Again, this is not rocket science. This is just putting all the stars in alignment the Japanese rice traders have produced for us, showing us what type of signals and patterns reoccur in human nature. And it doesn't necessarily have to be Japanese rice traders' patterns. We've got Western terminology. This is head and shoulders in Japanese terminology, it's known as the three mountains. But look what happened over here to confirm this next move. There's your shooting star doji gap down. Now you're through this level, and they gap down through the last support level. You can still be shorting this with the expectation that you might be coming all the way back down here into this level. Now, will it get there? Who knows? But the probabilities are pretty strong that that's what the three mountains or the head and shoulders patterns illustrate. There's been a major change of investor sentiment. So we recommended re-shorting NVAX. Down here, looked like they were coming back up, so we covered our short position. Then after a few trading days right here at the T-line, notice your evening star signal, one of the 12 major signals. Although it's not occurring at the top of a trend or in the overbought area, it is pretty much indicating that they are failing at the T-line and illustrating that there's another leg to the downside, a bearish J-hook. And so if you didn't short it today, if it opens lower tomorrow and trades lower through this level, it's pretty much confirmation that wave 3 is now in progress. So we can use different elements of candlestick analysis. For example, we've been long the lithium mining stocks. And as you can see, with the market trading lower, this sector's been acting strong. And we can see in this one where they use the 34 EMA, which is also a relatively effective support or resistance level. And so we're just going to hold this as long as it stays above the T-line. So what basically this boils down to is you want to go with the flow. You might see a little bobble here or a pop back up to the T-line. But remember, the T-line is a very strong trend indicator. As long as they don't close above the T-line, assume your downtrend is in progress. So when you put everything in order or all your stars in alignment, remember the movie Moneyball, where they changed their system to high probability statistics on players, and it didn't work as long as they had Pena on first base, who was a superstar, but he didn't fit into the system. When they traded that superstar and got somebody that fit into the system, everything went into alignment. And that's exactly what we're going to be teaching people this Saturday in our Ultimate Candlestick Training seminar or training, that we're going to, with one visual glance of your chart, you're going to be able to recognize what the market trend is doing, what your strongest signals and patterns are, what your confirming indicators are, when your entry is confirming, when to be back out of a bad trade, and when to take profits. When you can do this and you have all that elements into your visual analysis, now you don't have any doubts. That basically eliminates your emotional trading and puts you in situations where the probabilities are extremely strong. You're in a good trade setup. That'll be it. We'll see you in the chat rooms.